Sticking with commodities, let's talk about sugar because it is the best performing commodity over the past year, and apparently it's set to go even higher. Let's check back in with Zara with more on that. So it's all about sugar.
It's all about sugar, Carol, all having to do with India, which consumes the most sugar in the world. India also happens to be the second biggest sugar producer. That's behind Brazil. Now, the problem is that India's production is off about 40%, so it's had to start importing again. The first time we've seen this since the 2005-2006 season. And as you can see from this chart, around the time that they have these record imports that we talked about, sugar went from about 5 cents a pound to about 14 cents a pound at the end of about 2005. It actually got up to a 24-year high, as you can see from that peak there, up to a 24-year high, about above 19 cents. Everyone around that time was speculating that Brazil would use more sugar to make ethanol. Now, it's come down since then, but over the past year, look at the run-up. Still up about 50% since last year. This is about 16 cents a pound. The best performer in the S&P GSCI index of raw materials, ahead of gold and coffee. Now, Alan Winnie, he's chairman of Queensland Sugar Limited. He says sugar is going to hit 18 cents a pound. Remember, we're at about 15 cents now because of poor crops this year and next, and because of those imports from India. And he should know his company, Queensland Sugar, is the biggest shipper of sugar in Australia, Carol, which is the third largest exporter.
All right, so Zara, while we have you, Indian imports also responsible for the run-up in another commodity. We're noticing that. We're talking about palm oil, but that may be coming down. What's going on here?
Again, India, as you were just mentioning a while ago, the second biggest buyer of vegetable oils behind China. And India had essentially increased its imports of palm oil to increase its stockpiles because of low supplies worldwide. So that pushed up palm oil about 57% this year. And you have to remember that supplies in the U.S. are forecast to hit a 5-year low, and throughout the world, essentially shrinking supplies of palm oil. Now, representatives in India are saying that cooking oil reserves are now up 55%, so they'll likely curb their purchases of palm oil. And one analyst at OSK Research in Kuala Lumpur, he was saying that's going to increase inventories among the producing countries and take some prices lower. So definitely time to take profits in some analyst estimates. Carol, back to you.
All right, good to know. Zara, thank you so much.